Jake.
Thank you, Tyree. Thank you, gentlemen, for such a lovely audience as usual. Pleasure being on boys. So give me that chance.
Good afternoon, everybody. I hope you're doing well today. I just want to give it another minute, but I'm, like to thank Louis Armstrong for that nice introduction for me while we wait. Let's just give it one more minute and let some people have some extra time to log in and we'll get started. All right, well, looks like we hit the nail on the head here at 2 o'clock, so let's get rocking and rolling here. I want to thank you guys for taking the time to hang out with me today on this lovely Fat Tuesday that we have here, starting Mardi Gras. We're going to dive today into understanding the risks associated with cannabis banking. So my name is Kristen Parker. I'll give you a little background on myself here. I have been in banking my whole professional career. You know, because it's Fat Tuesday, I thought I'd dress myself up a little bit for this occasion. Like I said, I've spent my entire career in banking, but primarily the last decade or so in compliance with a specific focus on BSA. My last role was a BSA officer at a large community bank in North Carolina. That bank had a very unique and diverse footprint and a unique management set at one point that dove us into some high-risk banking spaces that I had previously not been exposed to before. But we dove right in and we took it on, and I primarily took on the space because frankly no one else wanted to. So I have a long history of banking high-risk clients, including MSBs, ATMs, and cannabis. But I come from one of the oldest hemp programs in the United States that was created shortly after by myself, right about a month or so after the Farm Bill was passed, just based on the demand in our area of needing someone to bank them. So I had the pleasure of building that alongside our regulators. It was quite challenging, but it was also a great experience. Now I currently work as the Director of Compliance for RiskScout, which is a company focused on solving the hassles and burdens of banking high-risk industries. So now that you know a little bit more about me, let's talk about today's agenda. So today we're going to talk globally at a very high level about cannabis banking and the risks associated. I want you to know that the cannabis industry, and you probably already know this, is very broad and far-reaching. So I'm going to do my best to take us through, at a very high level, these industry sectors, and try to uncover with you the possible risks about banking these industries. But I want you to know that there are many things we don't and won't touch on today because of time limitations. But I will do my best that I can today to take you and give you a broad level overview of the varied risks in this banking space. So we're going to discuss a little bit about the elephant in the room, legislative initiatives, different administration in place. We're going to define hemp and CBD together and marijuana. We're going to explore the industry sectors the best we can with our time that we have here today. We're going to learn best practices to help uncover and mitigate those perceived risks. And we're going to review relevant and regulatory guidance on hemp, CBD, and marijuana and then potential legislative changes that could affect your financial institution. So let's start with the elephant in the room here. We have a brand new administration that was sworn in 2021, the Biden administration. Now, Biden is not openly supportive about legalizing marijuana. He's not very vocal about it. He doesn't really need to. I guess you'd say it's probably safer for him not to. But the speculation is he would sign to legalize marijuana if presented with a comprehensive and meaningful bill to do so. And on the flip side, we have his partner, his sidekick, Kamala Harris, the vice president, and when you think about her and her history, there's a lot of area that people kind of are hesitant about with her in this space. But on the opposite side, she was the lead Senate sponsor of the MORE Act, which is an act that would deschedule cannabis and essentially legalizing it. And it did actually pass the House of Representatives in December 2020. It never made it to the other side, but that in and of itself really says a lot about how the mind is shifting in the legislative world to actually bringing up, talking about it, and in a more receptive manner. Then we have the runoff election in Georgia, which led to 2 more Democrats being elected. And with that, that effectively gave Democrats control of the House and the Senate. That could mean that it's maybe easier to pass some legalization in favor of cannabis, but like we said, time will tell. We'll see how those cookies crumble. And then we've got Senate Majority Leader Chuck Schumer, who has publicly made a commitment to make federal marijuana reform and is currently in the process, or so he states not too long ago, that he was putting all the existing marijuana legalization bills together to present one comprehensive bill for possible reform. Then we've got public opinion, which is changing on marijuana. We got the latest Gallup poll from November 2020 that showed an all-time high of 68% of people being in favor for legalization. And you think that number is, but I'll tell you that it was up to 3-4 years ago, it was 62-64% in favor. So to see it jump that far in that short amount of time means people's minds are shifting towards accepting rather. And we've also got this chart over here that shows us the Marijuana Business Daily is predicting that the cannabis market for retail sales be between $30 and $37 billion in 2024. That's a really staggering number when you take a look at what today's numbers are in 2021, which are $10 billion roughly in sales. So that's a huge jump in a really short amount of time, which is why this subject needs attention and why it's really, thought-provoking for us to be talking about this, and really smart for banks to be considering and listening in on this, because it's a market that you don't want to miss out on. So to really dive deep into this subject altogether, let's just start at a really high level here of what cannabis is. And when you really think about cannabis, you think about, well, the word cannabis has had a stigma about it for a long time, that everybody just associates that with marijuana. When in turn, cannabis is all the things that we're going to talk about today. It's both hemp and marijuana, and it involves CBD. So cannabis is hemp and marijuana are both derived from the same family of plants called cannabis. Hemp is legally defined as having less than 0.3% THC by dry weight. Now, that's total THC per the USDA. And actually in the Farm Bill, it's written as Delta 9. So that's that gray area that happened when the USDA got involved with their final ruling about total THC, which, it contradicts really the Farm Bill there, but they're the ruler there, so we're going to say total THC by dry weight when it's in their jurisdiction. Marijuana is the cannabis plant that has greater than 0.3 THC by dry weight. There's a really, really long definition if you look at, the Webster Dictionary version of marijuana, but to put it in layman's terms, this is really the easiest definition to digest it with. Now, CBD is one of over 100 cannabinoids found in the cannabis plant that can be derived from hemp or marijuana. Other popular cannabinoids that you probably hear of is CBG and CBN, CBC, and the list goes on and on and on. Now, what you're typically seeing in stores that you're seeing if you see oils, you're usually seeing that maybe marketed as CBD oil or CBN oil or CBG oil, but I will tell you 9 times out of 10, you're having those contents within that package be really labeled as full spectrum or broad spectrum hemp. So with full spectrum hemp, you've got all of the cannabinoids that were extracted from that cannabis plant, and you're not taking anything out. Now, it may have more CBD in it than it does other cannabinoids, but it's really more of a marketing buzz, in my opinion. And then broad spectrum hemp is all the cannabinoids with your THC being removed from there. So when you see CBD, or you might see it start turning into the words full spectrum, broad spectrum hemp more commonly used. That's going to be a tactic to kind of get the attention off of them using that, and maybe the FDA not be so, stringent on whatever practice that they're having. It may not work. It's just be on the lookout when you're thinking about CBD. That's all encompassing of all the cannabinoids that are in the plant. Now, currently, only hemp and hemp-derived CBD are legal in the United States. CBD can be derived from marijuana. That is currently not legal federally. Hemp is under the jurisdiction of the USDA, and CBD is under the jurisdiction of the FDA. Now, marijuana is, we all know, not legally at a federal level, but legal at some state levels, which just makes it further complicate the complexity of banking this industry. So let's talk about the players in this industry. On a high level, very, very high level, we have three categories of players in this industry. Some might, look at it as tier 1, 2, and 3. To get it a little bit more digestible, we're gonna break it down even further. We're gonna call them plant touchers, direct supporters, and ancillary businesses. Now, each of these are equally important in the supply chain of the cannabis plant, and from different perspectives, and these players all span across CBD and hemp marijuana industry. So you can take these players and apply them to CBD, hemp, and marijuana industries. So it makes it a little bit more digestible when you're building your policies and procedures and stuff, to be able to think about it in a more, it doesn't make it, to me, it makes it more digestible and not as overwhelming to start thinking about the complexities of the industry. Now, let's start with talking about the plant touchers. There's going to be a lot more industries involved in the cannabis sector than we touch on today. I've talked about that before. But today, I'm going to cover the most prominent parts of the industry as we go through these sectors. Now, the risks associated with plant touchers have some commonalities between hemp, marijuana, and CBD. And they're often considered the riskiest of all the cannabis-related sectors. And this is because they actually, they have their hands on the plant. Their involvement with the cannabis plant makes it a little bit more risky, or perceived risks. Most of these sectors, these producers, handlers, processors, manufacturers, retailers, all those guys, most of the time, and all the time with producers, are going to be regulated by the state in which they operate due to the inherent risks involved in the industry. Now, you're going to also run into the fact that some states are more strict than others. So you can't blanket statement that the risks are the same for an operator in this state as they are in a different state, because they may have more or less risky presumptions by whoever passed their laws, and the rules may be looser for a retailer than they are in one state than they are in another. I'll give you an example. Would probably be in North Carolina. You don't have to be licensed to sell hemp retail, but in some states you do. Texas you do. So to me, I'm of the opinion that you really got to do it. Base your risk on what's the worst that could happen, and back it up from there. In my opinion, producers are less riskier than retailers. Producers, very, very strict rules behind them. Very, if you go to Louisiana and you grow in hemp there, you've got to report in 3-4 times during your growing season what's up. On the other hand, like I said, North Carolina retailers, I could go and start my own store right now and nobody checks on me to see if I'm selling the right products, if I'm making the proper claims, all of that. So it's really a wide variety of risk here, but these are considered and perceived to be the highest risk. So what are the risks associated with banking this industry? So really, even if you are only banking one state, it can be difficult to keep up with the moving target of hemp, CBD, and marijuana rules and regulations. It can vary so much from state to state what the rules are. We've got some states that when you buy, if you're a grower, when you buy your hemp seeds to grow, you've got to buy it only in state. Other states are not the same. So it's really hard to keep up with that ever-changing moving target. It doesn't move as quickly as it used to. And luckily with the final rule from the USDA, we have a little bit more concrete of what the actual minimum requirements are, but it's still very, very interesting to see how things over time evolve, and it can really evolve very quickly. So unless you have a subject matter expert in it that's reviewing it for you, it can make it very cumbersome. So while hemp is legal, you can end up with a farmer that accidentally grows marijuana. So let's just say, you know, you're a bank that says, I don't want to do marijuana at all. I'm not going to touch the THC part, but I'm going to support hemp because it's federally legal. You still have a lot of risks there because hemp is the only plant that you can grow. You can plant a legal seed that can grow into an illegal plant if the THC rises above 0.3. So it's just really, it's a really complex industry into that part, because we all know that growing seasons, even if you have your own garden outside, is very, very different from, you know, state to state, gosh, season to season. I mean, I don't know if you, our headquarters is in Austin, Texas right now. The weather is insane there. So it's like, it's very, very unpredictable. So the THC levels can be very, very unpredictable if you don't have consistent growing conditions, which can, you know, be, you know, changed and affected by your soil, your fertilizer, your pests, the whole thing. Now, another consideration is CBD manufacturers who are really held back by a lack of FDA rulings, but despite being told not to do something by the FDA, many are ignoring that rule. And, you know, that comes with the FDA having ruling over the CBD because it was used in a drug to treat epilepsy. At that point, it got in their jurisdiction, which we all are like, we know, if anything, the FDA moves pretty slowly, and not without reason sometimes. They've got to make sure that what they're recommending and what they're endorsing is truly, you know, safe for the consumers. But the way that they move so slow compared to how quickly moving this industry is and how quickly the consumer demand isn't matching up. So a lot of people in the CBD industry are taking that, you know, the risk and just going ahead and putting it in food and putting it in cosmetics and putting it in dietary supplements without the permission of the FDA. And there's some really strict rulings around what you're allowed to say in regards to how you're marketing your product. So there can be no claims of efficacy. You can't, you know, rightfully so, you can't be going out there and telling these folks that this can cure their cancer, this can cure their COVID. That's obviously not the right thing to do. That's understandable. A lot of folks that we see that we're reviewing their websites and stuff are steering clear of that or dancing around that subject. It can be really, it's a really gray area. What was really interesting this about past month, I think it was, is the store that got fined for marketing their product with a mermaid on the front of it. It was I believe it was a CBD product, and it had, you know, a purple mermaid on there. Nothing very childish to me. I think it looked more like a Starbucks type mermaid, but I don't know if somebody just woke up on the wrong side of the bed at the FDA or whoever gave them the fine, but they were fined $10,000 for making their product look like it was attractive to children. You know, so with that kind of gray area there, and that world can make it really hard for these industries to really take off and have a direction without somebody just randomly getting involved at some point in their operations. So the other thing to consider is the liquidity risk involved in banking plant touching businesses. Since their only revenue is derived from cannabis, if there were to be rules and regulation changes that negatively affect this industry, it could make them completely unviable. So you've got to take that into consideration, especially if you're in the lending space, especially if you are counting on this to be a huge part of your liquidity portfolio. It's just all those things are very important to take into consideration. And then we've also got law enforcement confusion that continues. It's hard. I get it that in these states, as they vary with their rules and regulations, maybe they've got more conservative law enforcement. Maybe there's personal bias against it. Maybe they just don't have the time. But there's not a lot of really good education happening from our perspective with law enforcement, especially on a local level, that can negatively affect this industry. And a good example of that would be a recent arrest of a hemp. I think it happened about a week or maybe 2 weeks ago at this point, where they were retailing, selling smokable hemp, Delta 8, some CBD oils and whatnot. And they came in, and law enforcement came in and arrested her and seized her products. Now she's saying that she bought her product from a wholesaler that provided certificate of analysis to prove the THC level is below the 0.3, but to them, what she is selling is, in their eyes, marijuana. So you still got that really unfortunate miscommunication and misunderstanding of what is and is not allowed. And so let's talk about direct supporters next. These are the guys that earn a substantial revenue from selling their product or service to the cannabis-related business, but it's not their sole income. These are just a few examples of the direct supporters. Again, there's many more where that came from. And these guys are perceived to be less risky than the other plant touchers, than the actual plant touchers themselves. So because they aren't, solely touching the plant, because all their revenue isn't derived from the cannabis industry, that's why they're perceived to be less risky. I think that's kind of a gray area to say that in and of itself, in my own personal opinion, because a lot of their revenue is still coming from that industry, and a lot of it can, the plant touchers rely on it so much to support their day-to-day operations. So I'm going to be very, very honest with you that dealing with direct supporters of the cannabis industry can be a banking headache, and for many reasons, but mostly because some businesses may not disclose their connection, and there could be a very good reason that they're not. Some just don't know that they should, and that's perhaps maybe the bank isn't asking the right questions at account opening to uncover that business. But other parts are, some just don't, because out of fear of losing their banking relationship because of the cannabis connection. That can also be understandable because there's so little banks involved in this industry, banking in this industry. So if the business is a direct supporter of marijuana and doesn't disclose it, the bank could be in violation of their own policy if it states they do not bank a marijuana-related business. And the bank could be missing out on their reoccurring SAR obligations as required by FinCEN. Those obligations are every 90-day SAR filings like you would for other recurring SARs, but you could be not doing that because you just don't know that they are directly supporting this industry. And really, the ability for a bank to verify the funds from cannabis-related sales and to really understand that they are derived from legal activities can be very, very difficult from a compliance perspective. Understanding that this is probably going to be cash that they're receiving in from the plant touchers, because this industry is not well banked, they're having to deal a lot of cash. It can be hard to understand the source of the funds that cash was derived from, and that can give anybody who's in compliance or BSA a lot of heartburn, because that's our job, is to make sure that we understand the customer, we know the business, and we know the source of the funds are from legally derived activities. So when you can't comfortably do that, can make it also very, very difficult to bank these direct supporters. So defining a direct supporter can be tricky, and it can really vary from bank to bank as to what percentage of revenue they consider to be a direct supporter. It can be extremely difficult for a bank to come up with a number of what they want to be considered a direct supporter. I've seen it as far as low as 10%. I've seen it as high as 70%. I think probably a good rule of thumb is 50% or higher. We do see that more common than other numbers, but it's really up to the bank's risk tolerance. And it's the same issue as a plant toucher. The majority of the revenue is derived from the cannabis industry, which also makes them vulnerable to cannabis regulation changes, especially if they're in opposition of the industry. So you run into the same issue like you do with plant touchers in that space. Now, ancillary businesses are perceived to be the less risky of the cannabis supply chain. They are not specifically focused on selling to the cannabis industry, and their revenue is from that in comparison to the rest of their income is really incidental. These are just a few categories of who is considered an ancillary business. People who supply the fertilizer, people who supply the farming equipment, your utility companies, your tax firms, your so on and so forth. Most banks, I will say though, don't consider an energy company to be in their ancillary business bucket for cannabis related businesses, because most energy companies can't choose who they service, right? So you can't hold that against a utility company in that perspective. So they just not turn a blind eye, but just say it's not reasonable for us to file reoccurring SARs on this utility company when it's just the nature of the operations. Now, when speaking about a commercial property business, these are large brokerage or real estate management firms not solely servicing the cannabis industry. If they were solely servicing the cannabis industry, they need to be placed in the direct supporter category. But this is taking into consideration that they just, rent out a small space to maybe a retail store, something like that. These two, like it is with direct supporters, can be really hard to define per banking terms. They usually don't disclose that they are serving the cannabis industry in any stance, any support of the way. And that's probably because they don't know they are. I've seen that happen more oftentimes than not, is that they wasn't their sole purpose of their business to sell to them. Somebody purchased from a cannabis company to them, and it happened to show up in some transaction monitoring, and that's how it was uncovered that business is either willingly or unwillingly involved in the cannabis industry. Usually, these guys are only detected through monitoring tools, and it's usually by accident. Like I just said, it's some transaction that's been conducted, some funds they've received in, that has led to the uncovering that this is somebody involved, indirectly with the cannabis industry. But even at a small level, any involvement in the cannabis supply chain can be considered risky. It still could be considered aiding and abetting if the involvement ended up in some part of an illegal activity. And, lastly, but certainly not least, you still have to file SARs, reoccurring SARs, for these transactions / businesses involved in marijuana per fencing guidelines. So even if it's an easy bit of activity, the safe bet is to file. There's nothing telling you out there that you shouldn't file. It doesn't say you should, but it does say you should file for marijuana-related businesses, and technically they would fall into that category. So it's important for you, to self-protect here and just go ahead and file those SARs. You don't want to be the one holding the bag when your auditor or examiner comes in and you just say, well, it's only a little bit. Well, it depends on what regulator or auditor you get to say whether that's reasonable or not. And you certainly don't want to be, you need to protect yourself in this manner. If it's a safe bet to just file it. Now, what are the best practices to help uncover and mitigate perceived risks? These best practices are universal, whether or not you have opted to bank cannabis or not. So that's important to remember as we go through here. All staff needs to be trained to detect cannabis-related businesses. It doesn't matter if it's your frontline, your loan people, your merchant providers, whoever, they need to be trained to detect cannabis-related businesses. And they also need to be trained, once they get to detect that business, to reroute them to appropriate staff to complete due diligence on the business prior to opening. That's way, if you have a cannabis banking program, they could be fully vetted through. If you don't, that person can just say, nope, I'm sorry, we can't do business with you, and potentially blacklist them from doing business with you. Compliance staff needs to have cannabis training, whether or not you have a formal program or not. That's important. Whether you have a formal program or not, they need to be, at least at a high level, have an understanding of this industry. And by doing this, it ensures your policies and your procedures are adequately written and adhered to based on your institution's risk tolerance. On top of that, it's important, whether you have a program or not, that you have continuous training to stay abreast of the moving target in this industry. They need to fully flesh out and understand, stay abreast of what's going on in order to fully protect themselves and the industry. You also need to ensure you have proper staffing and tools in place, because even if you opt not to bank cannabis, you should still have staff in place that know how to detect cannabis-related businesses. I know I said that earlier, but that tells you how important that is that they've got to be trained to be able to at least ask the questions to be able to detect them. From the bank that I left, we had it as part of the account opening process. The questions that were asked by the account opening staff included clues that would uncover if this customer was involved either directly or indirectly in the cannabis industry. And if they answered yes to any of those questions, it would stop them from account opening and redirect them to compliance, so that compliance could have a second set of eyes on there and go through their due diligence efforts to uncover any potential risks and potentially approve or decline that account. It shouldn't be that the frontline staff has to be as thoroughly trained as your compliance. Frankly, they don't have time to do that. I live the teller life. I know it's very busy. There's a lot of things going on. You got sales on the mind all the time. So if they can close an account, they're going to want to close on opening a new account. Check those boxes, meet those numbers. If they have the opportunity to open an account, they're probably going to want to, without asking the right questions. But if you put the right questions in place and train your support staff, that your new account opening staff, that you're there to support them and help them make the right and have meaningful relationships that are right for the bank, they're going to buy in more to your asking of those questions to those potential new customers. Now, if you opt not to bank them, you need to use tools at onboarding to detect and decline those relationships. That's exactly reiterating what I just said there. But if you opt to bank them, you need to make sure you not only have proper onboarding procedures and tools, but you also need tools in your pocket that aid you in onboarding and ongoing due diligence efforts. That in and of itself cannot be understated. After you get those guys onboarded, whatever your process is for doing so. The real work starts after they're your customer. That's when you find the biggest point of failure, is when people don't consider what it's like after that customer has onboarded. If that customer is your customer and they're in the cannabis business, they require due diligence, enhanced due diligence, ongoing due diligence. Now, that due diligence can look different from financial institution to financial institution, but typically they remain the same amongst people in this industry, banks in this industry, that are looking at these guys either every 6 months or quarterly, are having to do site visits and whatnot. So it's important. Take it from me, the gal who created one of the first hemp programs in the United States, who went through everything under the sun to make sure it was correct, to not understand or know the burden of what comes after you turn that program on. Don't make that mistake. Make sure everybody is properly in your management team, your board of directors, of knowing that you're going to need help staffing wise, or you're going to need tools that effectively help you manage these relationships, onboard them and manage them, that help mitigate the need for additional staffing. Trust me, just take my word for it. Don't be me in that instance. So now let's review what regulatory guidance we have out there that can help us really better understand that everything I said is understood by our regulators, that they know that there's risks involved, that they know this industry is out there being banked. We have regulatory guidance and FinCEN guidance supporting a risk-based approach to banking in general, with references to cannabis along the way. This includes FinCEN expectations on banking marijuana-related businesses. Reoccurring SAR requirements for marijuana-related businesses are included in that. There's different tiers of those or labelings of those SARs based on if there's illegal activity involved, or if it's just you reporting in to FinCEN that you have a business there. And unfortunately, those recurring SAR requirements are for all the parties we talked about today: plant touchers, ancillary businesses, and direct supporters. FinCEN has the idea of what they were trying to do with these recurring SAR filings made sense in the beginning. They were trying to measure how many institutions are banking the cannabis industry. But just because you're filing a SAR on it doesn't mean that you're actively banking that industry. So really, it's outdated to what they were really trying to achieve with that, in my opinion. Yeah, so in July 2020, we finally got our hemp guidance from FinCEN. It felt like it took forever to get anything from them. But to have something is better than nothing. And while it doesn't tell us, and it's welcomed, we like having something in writing from them, but it's really vague to what actual program requirements should entail. So it's still hard for banks to hop in there. Even if when I created the hemp program in 2018 or 2019, even if I had this guidance, it wouldn't tell me how to go about it and set it up at my bank and stuff. So there's still a lot of things. And now I understand they're not wanting to set up these guidances for banks to have to follow every point on them. They don't want to set us up for failure, but a little bit more guidance would be really, really welcomed. Now, if marijuana legalization were to pass, it's going to likely be up to the states like hemp. And we all know and recognize how messy that rollout of hemp was. And it still, frankly, is pretty messy, even 2+ years down the road, or, from the original passing. You can expect the same for marijuana, unfortunately. It's like the same thing with, if you're banking money service businesses, or you're banking ATMs, or you're banking any high-risk sector, that have been legal for a long time. What's the expectation? The expectation is that from a BSA perspective, you're still performing enhanced due diligence. You're still required to do certain things to make sure that those businesses are following the state rules and guidelines, that there's no illicit activity happening, that they may be aiding and abetting. And the same is going to apply to this marijuana industry, regardless if it's federally legal or not, because we're still running into the same thing with hemp. So let's talk about some potential legislative changes here. There may be maybe some hope out there in our future. We've got the safe banking bill, which I think feels like we've been talking about for 50 years now. It would prohibit a federal banking regulator from penalizing a depository institution for providing banking services to a legitimate marijuana or hemp-related business. It's likely going to have a lot more banks feel comfortable in this space of banking marijuana if it passes, and we may see more banks become public about their cannabis banking programs. There's a lot of underground banks or banks out there that are very hush-hush about banking marijuana, even hemp, even though that's legal. But it'll be really interesting if this passes to see who comes out of the woodworks and already has their programs in place. And I would advise you, if you don't have a program in place, even if you haven't turned the switch on, you really need to have those conversations, because when that switch gets turned on and you don't have anything in place, you're going to be left high and dry, no pun intended there, and you're going to wish that you had put more thought into this beforehand. Now, on the flip side, we have the potential for marijuana legalization. If it were to pass, like I said on the last slide, it'd probably be up to the states like hemp. Probably going to be a messy rollout. We're still dealing with that 2+ years later after hemp. The passage of it would hopefully stop reoccurring SAR requirements for marijuana-related businesses, but likely not immediately. It's still going to have a huge regulatory burden that comes with it. Unfortunately, there's still going to be the same thing like we talked about with MSBs and ATMs. You still need to make sure that your client is doing the right thing. And it would, what I think is most interesting, force the conversation about dealing with legacy cash. When we talk about legacy cash, we reference back to all of the cash that was having to be collected and handled during the time when marijuana was illegal. And this is a very cash intensive industry because they don't really have any choice but not to be, because of the lack of banking opportunities that they have. And the fact that, you can't do anything with Visa on it or MasterCard, any of that kind of stuff. So forced to be cash intensive, which is now created a public safety issue. We need to address that public safety issue to get the cash off the streets, or better yet, probably buried in someone's backyard or in a bunch of storage units or under somebody's mattress, stuff like that. It's really important that whether it's through the safe banking bill or by marijuana legalization, that legacy cash is dealt with, and it's going to be very complicated, very, very complicated on how that happens. So while we hold our breath and wait and see what's going to happen in the cannabis space, it's important to start thinking about how your financial institution is going to be respond. Like I said earlier, you don't want to be left in the dust once everybody else already being proactive in thinking about this. A couple action items for you to consider. You probably don't think you're banking cannabis, but I'm gonna I bet money on it too, that you probably are, and you just don't know it. That's okay, that happens. That happens a lot, actually. But the good best practice I like to tell financial institutions is, no matter the high-risk industry, is run regular keyword searches in your transaction database to try to detect these type of customers. If you want to know how to do that, reach out to me. I'll help you, with some keywords, how other institutions are doing this. This helps to detect and uncover existing clients that may be involved in the cannabis industry. And I'll tell you, regulators love this, especially if you say you're not banking a certain industry, because it shows that you're not trying to turn a blind eye. It shows that you're actively, you're not just saying, oh no, we don't do that, when you actually do. And how do you know that you don't if you're not trying to look for them either? So make sure your account opening questions, especially in the branch, are designed to help detect and redirect cannabis related businesses. You need to make sure your frontline staff have a way to smoothly transition potential customers to appropriate back office personnel for further review for approval or declination. Another really, really important part of it is designing your policies to be flexible, your cannabis policies, to not pin yourself in a corner. You can take it from me, it's okay to leave a little gray area in your policies. You never want your policies to be designed to fail. You need to ensure your policies are well known and distributed to everyone at your financial institution. Don't you give anybody an excuse to say, I didn't know that was a thing. You make sure that they get it and that they testify that they have read it. You also need to make sure your procedures are robust and also well known at your financial institution. So every customer touching department needs to be thoroughly trained. Absolutely thoroughly trained. And you should have a main contact or department, primarily, usually, living in BSA, in charge of those procedures. Usually your subject matter experts in charge of those procedures so that they can update accordingly to any rules and regulation changes and be the one out there to communicate it out. Another thing, same thing with your policies. You better make sure those procedures are well known and distributed to everyone at your financial institution. And again, you make them testify that they read them, because you don't want something slid through the cracks and you be the one who's left holding the bag on that. Involve your regulators, guys. Most regulators really, really want to be involved in your institution, and in a kind way. I advise you, don't surprise your regulators. I don't care if it's about cannabis or what it's about. Don't let your regulators ever walk in the door and not be knowing that you either dove into a new high-risk sector, you're having, some CTR issues. You don't ever let them don't take them by surprise. You definitely also, if you've involved your regulators, don't want to tell them when you involve them, yeah, we only plan to bank 10 of these guys, and then before you know it, you're banking 100 to 200 of them, and they've only beefed up their regulatory staff for your next exam with 1 or 2 regulators, and really they needed 10. So again, the happier your regulators, the happier you are going to be at the end. And again, I'm going to express to you, and I can't express it enough, communicate your capacity, staffing, and tools needed to your executive management and board of directors prior to implementing a CRB program. Don't try to do it afterwards, people. I'm telling you, it's a bad idea and it won't work out in your favor. The other and very, 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 very important thing you guys need to know and take away from here, and if you only take one thing away from here the whole day, I want you to know you should always plan for a contingency. You should always have a contingency plan in place for your subject matter expert's exit. This can't be understated. There is nothing more devastating to a program than to put all your eggs in one basket, think your SME is going to work at your institution forever, and not have a plan in place for someone to be able to just pick up that program and run it like they've been running it the whole time. When I left my last institution, I preached for a long time there should have been a contingency plan. There was never a contingency plan made. And the consequences of not having a contingency plan means that they had to exit their almost entire high-risk profile, including almost all of their cannabis. Because of that, that was about a year and a half plus of work down the drain, unfortunately. And, a lot of revenue lost and a lot of deposits lost because of it. So don't ever put your eggs in one basket, guys. At least have the proper tools in place to ensure that somebody can just pick this right back up. So that concludes our presentation today. And as always, our sponsor today is RiskScout. And I'm not going to bore you. I'm not going to sales pitch you. I don't even know how to sales pitch. That's not my strong suit. Never has been, never will be. But I will tell you this: RiskScout is a company that I adore because they really, really work on easing the compliance burdens with banking higher risk industries, including cannabis-related businesses. They also serve as a virtual branch for customers to apply for, a new account online, and that in and of itself is a huge piece to this COVID puzzle about continuing to grow your business, right? We have a bank that launched their cannabis program at probably the worst timing possible, right before COVID. We're only seeing a handful of people in the branches from the time they launched it, January, February. Once they kicked RiskScout in, they're now onboarding and seeing applications for about 50 businesses a month. So that tells you that, despite that they have all their branches still closed, they still are able to drum up business. And to harp on what I said last, it also serves as a contingency plan for when your SME leaves. Somebody can pick, it's designed to pick up and run with for whoever's next in line. So with that, I'm going to leave you with this. I'm going to ask you to consider joining our high-risk banking group on LinkedIn. It's a bunch of professionals like you and me, telling the good, the bad, and the ugly about high-risk banking, talking about emerging trends. So occasionally you get to see a picture of a good-looking dog like myself, my own dog, in their Mardi Gras mask, treats like that. So with that said, I will ask you guys if you have any questions. And you guys are always welcome to reach out to me on LinkedIn or over email or through RiskScout's website. I'm always more than happy to talk about anything and everything BSA related, not just cannabis. So feel free to reach out to me anytime. It was a pleasure talking with you guys today. I appreciate it.